Welcome back to the Deep Dive. Today, we are zeroing in on what feels like one of the most remarkable corporate turnarounds we've seen this year. Ardelyx, ticker ARDX, reporting their Q3 2025 results.
Yeah, this call dropped post-market on October 30th. And, the market reaction wasn't just positive, it was, frankly, explosive. Stock jumped over 20% on huge volume.
It really felt like a clear signal of investor validation, didn't it? You think back a couple of years, this company was, really fighting for survival. They were navigating these big regulatory roadblocks, needed cash injections.
And now, their commercial success is just completely flipping the script. It allowed them to deliver a clear double beat on earnings, raise guidance on their main growth driver, and, maybe most importantly, announce a brand new pipeline initiative and get this funded purely by their own cash flow.
Right. That transition, moving from relying on, external funding to actually generating enough internal capital to reinvest, that feels like the single most important narrative coming out of this quarter.
Agreed. So our mission today really is to synthesize those headline numbers, the strategic updates, the pipeline news, just to give you a clear picture of why the street reacted so strongly, why they believe this momentum isn't just sustainable, but actually accelerating.
Okay, let's dive in. Starting with the hard numbers, the financials really set the stage here.
They really did. Ardelyx reported total revenue of $110.3 million. That just blew past the consensus estimate, which was around $100.5 million.
Wow.
Yeah, and that translates to a very healthy 12% year-over-year growth on the top line. Pretty solid.
And the bottom line showed some real operational efficiency too, right?
Yeah.
GAAP EPS came in essentially flat, $0.
Exactly, which sounds maybe boring, but it was a fantastic beat against the consensus estimate. They were expected to lose about 6 cents a share.
So moving from an expected loss towards profitability, even just break even, signals some extreme discipline in how they're scaling their commercial operations.
For sure, and that success flows right onto the balance sheet. They finished the quarter, this is as of September 30th, 2025, with $242.7 million in cash equivalents, and short-term investments.
That's a solid cushion.
It's a really strong capital position. And it's crucial, right? Because it provides the foundation for that decision we mentioned to reinvest in R&D. We'll definitely get to that in a bit.
Okay, good stuff. So let's unpack the engine that's driving all this success. Because this quarter's story, it's unequivocally centered on IBSRELA. Management kept calling it the foundation, the main engine for Ardelyx's future growth.
And the numbers absolutely back that up. It's kind of staggering growth for a product in this specific market. Q3 IBSRELA revenue, $78.2 million.
$78.2 million. And what was the growth on that?
That was a massive 92% increase compared to the same quarter last year. 92%.
Wow. Okay. So that confidence obviously translated immediately into raising their full-year IBSRELA sales guidance. Bumped it up to, what, $270 million to $275 million?
That's right, $270 to $275 million for the full year 2025.
Now, let's maybe push back a little here, be critical for a second. They still hold this really ambitious $1 billion plus peak sales target for IBSRELA long term. Does that $275 million guidance maybe feel a touch conservative? Are they kind of under-promising so they can easily beat later?
Well, the classic management strategy, isn't it? Set a solid floor while you keep aiming for that aggressive ceiling.
Yeah.
I think what matters more here is the clarity of the commercial strategy that's actually supporting that growth.
Okay, tell us about that.
They made a very intentional, and it seems successful, decision to position IBSRELA primarily in the second and third line setting. They aren't trying to fight for the very first treatment slot right out of the gate.
Ah, interesting.
Instead, they're targeting this huge kind of frustrated patient population, people who've tried other things and aren't satisfied.
Okay, and what defines that frustrated population? What were they on before?
It really comes down to the mechanism of the older treatments. So the previous standard of care often involved things called secretagogues. These are therapies that mainly just increase fluid secretion into the gut.
Right.
And while they might work initially, management highlighted some data showing that, look, over 75% of patients on these older secretagogue treatments, they continue to experience lingering symptoms or just general dissatisfaction. They're not happy.
So IBSRELA is basically positioned as the escape valve for those treatment failures, and they had some data on that.
Yeah, their own patient satisfaction data looks compelling.
Yeah.
They said 88% of surveyed IBSRELA patients reported satisfaction. That's a pretty high number.
88%. That level of patient loyalty, that clinical differentiation, I guess that justifies their confidence in that longer-term goal, hitting that $1 billion plus peak revenue based just on that second-line adoption strategy.
It seems to underpin it, yeah. And before we move on from IBSRELA, just a small but important detail on efficiency. They mentioned a slight improvement in the gross to net deduction for IBSRELA. It finished Q3 at about 31%.
Okay, gross to net. That's basically the difference between the list price and what they actually receive after rebates and discounts, right?
Exactly. And as they scale up towards, potential blockbuster status, every single percentage point they save in those payer deductions, that flows directly to the bottom line.
Yeah.
And that helps fund that R&D push we keep mentioning.
Makes sense. Okay, let's switch gears now to the other crucial asset, XPHOZAH. This one operates in a much more, turbulent environment, it seems.
That's a good word for it, turbulent. While IBSRELA was definitely the high flyer this quarter, XPHOZAH actually showed some remarkable resilience, I thought. Revenue came in at $27.4 million.
Okay, $27.4 million. How does that compare?
Well, it showed solid 9% sequential growth. So quarter-over-quarter growth was pretty good.
Right, sequential growth. That's the key metric for XPHOZAH, I say, right now, isn't it? Because the year-over-year story is dominated by that major regulatory headwind that hit them right at the start of the year.
Exactly. And this is where we probably need to tackle some of the jargon a bit.
Okay, let's do it. So XPHOZAH is an oral phosphate-lowering therapy. It's used mainly by patients with end-stage renal disease, ESRD. And the headwind was that change. On January 1st, 2025, the Medicare ESRD payment bundle change. How did that specifically hit Ardelyx?
It basically eliminated Medicare Part D coverage for these types of oral therapies. And I mean, it was devastating. Management was pretty frank about it. They acknowledged they lost about 60% of XPHOZAH revenue almost instantly because of this shift.
60%, wow. Now, there's some nuance here with how dialysis drugs are typically paid for, right? TDA.
Yeah, exactly. So most new drugs that are meant for dialysis patients, they try to get something called TDA status. That stands for Transitional Drug Add-on Payment Adjustment. If you get TDAs, it means that dialysis centers can just buy and bill the drug directly through Medicare. It's relatively straightforward.
And Ardelyx did not file for TDA JOBA status for XPHOZAH.
Correct. That was a strategic choice they made earlier on. So when that Part D coverage just vanished, they couldn't fall back on that simple dialysis center billing route. They really had to scramble.
So what did they do?
They had to quickly implement these, frankly, complex commercial workarounds. That meant focusing heavily on non-Medicare patients who have private insurance coverage. And, critically, they set up the Ardelyx Assist Patient Assistance Program for Medicare patients to try and ensure access, despite the lack of direct coverage.
Okay, so the fact that they're now posting 9% quarter-over-quarter recovery suggests they are successfully navigating that turmoil, at least somewhat. But we have to ask, management keeps reiterating this long-term peak revenue guidance for XPHOZAH of $750 million.
Yeah.
I mean, is that realistic, given they lost 60% of their revenue base almost overnight and now have to rely on these complicated workarounds for that core older Medicare population?
Look, that $750 million target is definitely management's long-term bet. It assumes, I think, some market stabilization, maybe eventual favorable regulatory tweaks or broader payer acceptance down the road. We absolutely have to acknowledge it's a high-risk projection at this point.
Okay.
But that strong sequential recovery we saw, it does suggest their current strategy focusing on the non-Medicare segment, making that patient assistance program as frictionless as possible for doctors and patients. It seems to be paying off, albeit maybe slowly. They're essentially betting on the drug's inherent clinical value winning out eventually.
Right. Okay, so this is where the IBSRELA cash engine really meets the future potential of the company, the pipeline. This was arguably the biggest piece of news for the long-term story from the call. Ardelyx announced they're initiating development for ARDX 10531, or just 531. It's a next-generation NHE3 inhibitor.
Yeah, this is significant for a couple of reasons. One, like we said, it's the first new development program they started in over 3 years. That really demonstrates that the commercial cash flow from IBSRELA is now directly funding organic R&D again.
That's a huge milestone.
It is. And two, it shows them leveraging their existing expertise. Both IBSRELA and XPHOZAH are also NHE3 inhibitors. And HE3 stands for sodium hydrogen exchanger 3, basically a key mechanism the body uses to manage sodium and water absorption, primarily in the gut and kidneys.
So we know the mechanism work, they have experience there, but what makes RDX 10531 next generation? What's different? This feels like the core insight the market really reacted positively to.
It really boils down to two properties, solubility and potency. So previous NHT3 inhibitors, including their own existing drug, tenapanor, which is the active ingredient in both IBSRELA and XPHOZAH, they were intentionally designed to be locally acting, right? To stay mostly in the GI tract and be minimally absorbed systemically. They have low solubility.
Okay.
RDX 10531, conversely, is described as being highly potent and highly soluble.
Why does solubility matter so much here? What does that unlock?
Well, think about it. If a drug is highly soluble, it means it has the potential for significant systemic absorption. It can get into the bloodstream more easily. And if you can achieve potent NHE3 inhibition systemically, meaning throughout the body via the bloodstream, you might be able to target, say, volume management, sodium handling, in ways that go beyond just the gut or the kidneys. This potentially opens up entirely new multi-billion-dollar markets that were previously off limits for this mechanism.
That makes perfect sense. The older drugs were kind of restricted locally. This new one might be able to travel systemically. Now, management was careful. They cautioned that picking specific indications right now is premature.
Right. Very early days.
But they explicitly mentioned that this kind of profile, high potency, high solubility could unlock broad therapeutic areas. Things like hypertension, maybe even heart failure. Huge markets.
Exactly. And that is the strategic pivot that got investors excited. The company is now potentially shifting from being, primarily a GI product story, maybe with a renal adjacency, towards becoming a broader NHE3 anchored portfolio. You've got the validated GI piece with IBSRELA, the renal piece with XPHOZAH, plus this new high-value optionality and potentially massive markets like cardiology.
And supporting this strategic acceleration, there was also news about a change in financial leadership. That's often a signal, right? When a company rejigs its leadership, it might be restructuring for that next phase of growth.
Yeah, they formally welcomed Suan Leitner as the new CFO and thanked the outgoing CFO, Justin Renz. It does suggest maybe they're optimizing the executive team for this next chapter, which looks like it involves more R&D acceleration alongside the continued commercial expansion.
Okay, so let's tie all this analysis back to that immediate investor reaction we started with. That huge 21% stock surge, nearly 19 million shares traded the next day. It really validates that the market is finally focusing perhaps on the durability and the predictable cash generation coming from that IBSRELA engine.
And management actually addressed this valuation tension directly on the call. They basically argued that the stock is undervalued. Their view is that investors are maybe over-indexing the noise and the turbulence around XPHOZAH's reimbursement situation.
Focusing too much on the negative.
Right. And simultaneously underestimating the sustained growth potential of IBSRELA. And crucially, underestimating the long-term optionality that this new pipeline asset, 531, brings to the table.
And the analysts seem to be listening, or at least agreeing directionally. The early takes we saw were pretty bullish, reflecting this belief that Ardelyx is kind of emerging from that regulatory darkness. TD Cowen, for instance, they lifted their price target to $10, citing the strong Q3 and that higher IBSRELA guidance.
Yeah, the sentiment shift feels palpable.
All right, perfect time to transition. This is not financial advice, but if we were sort of game planning this, pitching this setup maybe to an investment committee, what's the aggressive, maybe slightly outrageous trade rationale that flows from all this new information?
Okay, well, the setup itself is pretty compelling, right? You've got a clear growth engine now, IBSRELA, and it's generating enough cash flow, apparently, to launch a new high-potential pipeline asset like RDX 10531 without needing external funding immediately. And despite this, ARDX still trades at arguably a discount compared to some of its commercial stage peers.
So the pitches?
A pitch is essentially to go long ARDX. You're kind of treating that XPHOZAH peak sales guidance, the $750 million, maybe not as a guarantee, but as sort of the baseline valuation floor if things eventually stabilize there.
Okay, that's the floor. Where's the upside leverage?
The real speculative leverage, the kicker, comes from RDX 10531. The trade is really betting on two things. One, that the XPHOZAH reimbursement headwinds are mostly temporary market noise that will eventually get sorted or worked around.
Right.
And two, more importantly, that RDX 10531's unique characteristics, that high solubility, high potency, give it the necessary systemic profile to actually penetrate those multi-billion-dollar markets we talked about, like hypertension or heart failure. You're basically assigning a high speculative value to that new pipeline optionality. Why?
Sure.
Because it was essentially announced for free, funded entirely by the existing product success.
So you're getting that potential upside without, theoretically, paying much for it in the current stock price. What's the catalyst? When would this re-rate?
The expected re-rating event would likely be the announcement of phase 1 data for RDX 10531. If that early human data comes out and proves a favorable systemic absorption profile, shows it behaves as hoped in humans, well, then the stock could potentially re-rate based on the massive market size of cardiology indications, not just the current GI and renal markets.
And the IBSRELA cash flow provides that de-risked capital, that runway needed to actually get to that crucial phase 1 data readout.
Exactly. So, in summary, the aggressive trade, you're buying what looks like a profitable accelerating growth story in IBSRELA. You're treating the XPHOZAH difficulties as hopefully being at or near a trough, and you potentially receive the optionality for a billion-dollar-plus systemic therapy pipeline essentially for nothing in the current price.
Okay, provocative idea. So wrapping this up, what does this all mean for you, the listener, tuning in? The core success factors this quarter were pretty undeniable. You had record-setting IBSRELA momentum, a strengthening balance sheet, and this proactive commitment to pipeline innovation with 531.
Yeah, and I think the multi-year arc here is the real lesson in biotech resilience, perhaps. You should really consider how quickly Ardelyx managed to pivot. Fueled purely by the cash coming off IBSREL, they shifted from navigating incredibly complex, almost existential reimbursement turbulence around XPHOZAH
Just trying to survive.
to actively exploring these high-value, previously inaccessible indications with a brand new drug candidate. That rapid shift, moving from survival mode to expansion mode, all supported by organic cash flow. That's what makes this deep dive, I think, so compelling.
Absolutely. It feels like the engine of today's growth is quite literally funding the potential breakthrough of tomorrow. We'd certainly encourage you to follow the development timeline on RDX 10531 pretty closely going forward.
Definitely one to watch. And as always, please remember the information discussed here is strictly for informational purposes only. It's not investment advice. You should always consult with a qualified financial professional before making any investment decisions.
Couldn't have said it better myself. That's it for this deep dive. We'll catch you next time.